Hello everybody. So today I want to talk about stocks that are too cheap, way too cheap after yesterday's decline. The Nasdaq, the growth stocks, it was an awful week. They're all down, and that's mostly because of a liquidity drain from the government shutdown. Anyways, I've covered a few of these before. Let me just repeat myself. Celsius is down yet again yesterday. So Celsius is now trading at $41. To me, this is clearly another reaction. The stock is down about 45% compared to 3 days ago. To me, it's absolute nonsense, especially because I think it's widely understood as the stock was sold off unfairly because they didn't read enough that the cost, the termination cost for Alani was actually paid by Pepsi. They talked about the cost, and I think the market understood that Celsius was going to have to pay that price. No, it's PepsiCo who's going to have to pay the price. So that's the explanation as to why the cost is down, because frankly, the numbers are really good, especially for Alani. Alani essentially doubled the size of their business when they acquired it, but it's growing at 99% a year. Celsius is probably growing at 30-ish% a year. Celsius rebrand itself. The revenue growth recorded at Celsius right now is 44%, but that's because retailers are stocking up. They're stocking up. In reality, if you look at the sell-through at the store, is showing 13% right now. It's tough to exactly know. It's a spotty revenue growth, but if you look, the trend is up and only up. And if you go to the store, your local store, and look at the shelf space, you will find that the Celsius products have the same space as Red Bull or Monster, and in some cases more than Red Bull and Monster. To me, this is a heavily trendy item that a lot of people are buying. A lot of people are loving Celsius. It's a more accessible from a marketing standpoint. It's a more accessible brand, and also from a taste standpoint. They release their tastes. Their tastes are based on social media. Very trendy stuff, and growing very fast. So, anyways, at a 0.26 enterprise value over gross profit or revenue growth, this almost got halved in next to no time. The rule of 40 on this stock is a 63. They're highly profitable. EBITDA margin is 28% and predicted to grow. If you combine both brands, Celsius and Alani, you get a predicted next 12-month revenue growth of 35%. So for me, this stock is too cheap. The sell-off is way overdone. Let's talk about another stock, channel, darling, HIMS. I cannot possibly understand how HIMS was not up after the Q3. I really can't, and I'm being objective. The Q3 was much more than most people hoped. Like revenue growth, we have expected it flat. Not only did it come back in a big way, but the revenue growth outpaced Q2. We grew more than in Q1. Outpaced Q1. We grew more than Q1, even though it was widely expected that we wouldn't recover until a few quarters after losing the Novo partnership, the Novo GLP-1 partnership, which was a major hit during Q2. We lost a lot of customers because of that. And they said everything right on the call. On the call, they said that they were in conversation with Novo again. Branded GLP may make a comeback. The market didn't react to that. We have a big announcement coming on November 13th. I think it's related to peptides, but I really don't know. I think it's related to peptides, but it could be something else. It could be like a general event. So we have an event coming up. Maybe that's going to be a mover of the stock. But the stock is down 34% from the initial reaction, which was the right reaction, which was the launch of testosterone on menopause, which are going to be big hits. Testosterone and menopause are big market, especially testosterone. Their testosterone treatment is going to be picked up. This was, in my view, when the stock shot up in the 60s, in the mid-60s range. That was the correct reaction. And somehow it's just been crashing, and it's been suffering from the lack of that liquidity. The shorts are back in force, pushing that stock down. It's now trading at less than a $10 billion market cap for a revenue of $2.2 billion. Ask yourself, is that really fair? Is that really normal when you consider this company has such high margin and has been firing on all cylinders? They've been doing so well. So anyways, I don't understand this. Let's talk about e.l.f. Beauty. So e.l.f. Beauty, talk about a volatile stock. They dropped quite a bit. I had covered it back then, back in the tariff tantrum. The stock had dropped down to the 50s. I had sold out of it when it got past 100. I can't remember the exact price I sold it at. But anyways, yeah, it's back down again. So is e.l.f. a special case of another HIMS that just goes up, down, up, down, up, down? In my view, I would not fault anybody for finding that e.l.f. is a deal. I just happen to be biased and like Oddity better. I'll talk about Oddity in a second. I like Oddity better. The market seems to be spooked by their conversation of tariffs, and yes, apparently, they are impacted by tariffs. But you know what? It could have been much worse with the additional tariffs, which never came to fruition. They dumped the market. That fear about additional tariffs from Trump dumped the market, but they never really recovered. And the market kind of nitpicked as to a weak outlook because they dropped the guidance by like a few percentage points. To me, it's nothing scary at all. I think this is an overreaction as well. As a reminder, from less than 30 days ago, the stock is down 50%. We are down 50%. Think about that. Like the stock halved in 30 days. This makes absolutely no sense to me. And so I find it cheap. I find it a deal. I don't understand. Also, the market's complaining that a lot of the growth is coming from road. Road is growing 40% year over year. I find that's a good signal. That means they acquire the right firm at the right price. So anyways, I don't really get why it's so cheap. Here's another stock which probably fell in sympathy. I don't understand. Like I honestly don't understand. Oddity is down 47% on essentially no news in a matter of, I guess, 90 days roughly. Great Q2. Their Q2 was stunning. They have a third brand coming, third brand launching at the end of the year. They're going to have $2 billion brand, Il Maquillage and Spoiled Child. And it's my preferred play in the beauty space for two reasons. Oddity, my preferred play for two reasons. One of them, of course, is the valuation. At a 0.14, the valuation is cheaper than e.l.f. e.l.f. has had a little bit of hype going on for it lately. Oddity hasn't. And so Oddity is looking much cheaper. And e.l.f., by the way, has a lower rule of 40. Oddity has a higher rule of 40. Oddity is much more profitable. EBITDA margin is 29%. Oddity is growing faster, slightly faster, but about 6% faster. So growing faster, higher margin. What I like about Oddity is the valuation, the lower valuation. And the second thing that I like better is the business model. Their business model is the use of AI to sell products. So as you know, the main product is foundation. They use AI to do color match, right? That's an example of using AI to make the product stickier to the consumer. That's what I like about this product. And I also like direct to consumer. When you're a DTC brand, you have more money coming in. They've been growing consistently and profitably. They have a 20% revenue growth, 20% EBITDA margin target. They've exceeded both of them for multiple years now, and they get no respect from Mr. Market. So I really don't get why this stock is so cheap. I prefer Oddity to e.l.f. for, I guess, my own idiosyncratic reasons, but both stocks seem to be trading the same way, and they get no respect. So it's really tough to understand. They're just getting no respect. Same valuation. If you look at the size, e.l.f. is about twice as big as Odd. So if you look at the size, anyways, about roughly the same valuation, more or less. Moving on to Kaspi. Kaspi is a stock I've covered a few times. Kaspi is down. Okay, it's a little bit longer for them, about a year. In a year, it's down 46% in about a year. Kaspi is a very nice app from Kazakhstan. It's a super app. They have pretty much 100% market share over there. They do banking, they do fintech, and they do e-commerce. And they also handle, this is a Kazakhstan specificity, they also handle government matters like driver license, all sorts of certificates. They essentially run the DMV over there. So it's a very interesting stock. The stock has been growing 22% revenue growth predicted over the next 12 months. It's been growing quite fast. And they're going after Turkey, the country of Turkey. Let me put a capital letter here. The country of Turkey. They bought FC Bulata, and Turkey is a market that is 4 times bigger than Kazakhstan, and they're going after the Turkish market where they don't really have a super app yet. This stock has been flying under the radar for the longest time, and it's been sitting very, very cheap. EV over GP over RG is a 0.13. The rule of 40 is 89, and that is not a typo, by the way. The EBITDA margin is not a typo. Their EBITDA margin is really 67%, which is stunning. It's like Visa or Nvidia type margins. How do they achieve that? I don't know. It's pretty nuts. A very profitable fintech business over there in Kazakhstan. So I like the stock quite a bit. I think it's cheap, and I don't understand why this keeps dropping. Again, this is explained, in my view, very much likely by a lack of liquidity. Liquidity is not sticking to growth stocks right now. Liquidity is going to, I don't know, bonds, money market. They have already so much money market sitting on the sidelines. I don't know. My guess is that when the rates go back to zero, they're going to take these stocks off our hands for a pretty penny. That would be my guess. Moving on to Meta. So Meta dropping again yesterday. So Meta is now 17% down in a matter of, I guess, 9 days. It's the cheapest Max 7 per my spreadsheet now, trading at an enterprise value over gross profit over revenue growth for 0.5. The rule of 40 is a 72. The market has been spooked with Meta's report. I think they've been spooked because they committed to spend hundreds of billions of dollars in AI, as they should. They're a big tech firm, but I guess that spooked the market, and the market is like, oh, Meta is an AI stock. AI stocks are bad this week, and so we sell off Meta. Probably the reason. Another one is, I think there's a Reuters or Bloomberg, not too sure, article saying, 10% of revenue comes from fraud. I try to not read anything but X, so I don't really know. But you gotta get clicks when you're a newspaper. You have to get the clicks. That's how it works. So who knows? Who knows? Maybe, I don't really know. Anyways, Meta is executing on AI. That's point number one. Point number one is Instagram is about to become a whole lot more addictive. That app is going to become a whole lot more addictive. And of course, Meta owns Instagram. Instagram is the main social media that stands against TikTok, right, and holds up to TikTok. For that app, and don't forget also you have the WhatsApp property, which is a very valuable property as well. They essentially disrupted text messaging in most countries of the world, right? In most countries of the world, WhatsApp is used. So that's pretty stunning right there. But no, I think the better reason to buy Meta, if one is interested, is in my view, they have a credible path at owning the next computing platform. They arguably have done a better job and have had more success with their AR, VR, not a goggle, I guess I'm going to say, not a goggle, because these look like glasses. AI Meta glasses actually look like glasses. They're a little bulky right now, but they actually look like glasses, and you can see Zuckerberg seems to be executing on this. So is this the next computing platform? Maybe. I don't know, but what I know for sure is that you get you get that option, which is a real option at a possible market success, and you get it for free at this price. It's the cheapest. It's the cheapest Max 7 stock. It's the second or third fastest growing Max 7 stock, depending on you look at, depending on your views on Tesla or not. It's the second after Nvidia if you don't think Tesla's going to grow. If you think Tesla's going to grow a lot, then it would be the third one after Nvidia. So it still grows pretty darn good, 20%. Imagine growing revenue at 20% from a $189 billion sales base. That's pretty nuts. And of course, the EBITDA margin is big tech like at 52% EBITDA margin. So they print so much cash. The rule of 40 is a 72. This stock is cheap. I think it's cheap. Could it go lower? Maybe. I mean, it did in April, so who knows if we have another awful week next week. Who knows? I mean, we really need to get that government shutdown sorted out. Lastly, let's talk about strategy. I talk a lot about strategy on this channel. So yesterday, the stock rebounded, Bitcoin rebounded. We still didn't go up as much as we should have. Strategy should have gone up more than what Bitcoin did, but it didn't. Whatever. Strategy yesterday reported much success on the STRE IPO over there in Europe, IPOing at 80 euros. And they're raising 620 million euros, which comes out after fees and all to about $715 million, from what I'm understanding. $715 million is what outlets all over are reporting. So that's or 702 if you remove the fees. That's a lot of cash that's coming. That cash is likely to come not on Monday, but next Monday, because the funds settle on November 13th. So it's likely to come next Monday. So I expect a big buy, not this Monday, but the Monday after. But this Monday, I still expect a pretty good buy because they've been doing well on Stretch. Stretch has crossed dozens of times the $100 mark, which means that they were ATMing. The MNAV keeps dropping, but it is a slow bleed. It is not the catastrophic bleed in MNAV that some companies like NACA, for example, have had. It's or ASST as another example. It's nowhere. The drop has been slow and steady. The other Bitcoin treasury companies have had catastrophic drops in next to no time. So this company remains the blue chip. MNAV will eventually rebound, in my view. This too shall pass. We just need excitement to come back in the Bitcoin space, and with Bitcoin sitting at 102, 5-ish as I record this, it doesn't seem to be going on just yet and coming back just yet, but it will. We need the government to reopen. So these were the 7 stocks that I find way too cheap right now. And as always, this is not investment advice. This is not financial advice. Only entertainment on this channel. I hope you were entertained. Please like. Please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.